Uh,
Hello, people.
so yeah, I was just going over, the big picture and kind of what we're expecting from people. But everyone, if you can go ahead and mute your mics, we'll start now. If you have any questions besides Kevin, Kevin, feel free to interrupt. When Kevin teaches his lesson, everyone's gonna mute their mics, and if you have any questions, Kevin and I will be paying attention to the chat or message us on Facebook because every time someone talks, it goes to their camera, and we're going to be doing a lot of screen sharing, so we can kind of give you guys some visual looks of what to kind of look for in the market. Um, so before you got here, Kevin, I was just telling them a little bit about like what we expect as far as like everyone's equal here. We're all just trying to build each other up, and so we can get more trade calls in. We all want to. That's where the big money is. Not so much. We're not trying to make a profit off of anybody here. The more numbers we have, the more money that goes in everyone's pockets. Because the more experienced traders Kevin and I can build, the more money we're all gonna make. We're all gonna be a big team. We're not gonna be like sitting here worried about how many people we bring in. We have 10 efficient traders. We're gonna be millionaires just off of trading. That doesn't even count for everything else. That's just off of trading. Um, you know, so the reason why we didn't get started up with money managing right away is because we wanted people not to stray away from learning. Because if we allow you to stray away from learning, we're taking money out of your pockets. Because you're going to make less money just sitting there taking calls from people than you are actually putting in the knowledge yourself and doing it. It only takes a little bit. It doesn't take. It's not a lot. It's just a little bit of time. It's the same amount of effort that you put in your 9 to 5 job. Some people kill for that dream job. Well, this could be your dream job. Make your own reality your dream job. So, um, so that's why we kind of put the money managing off. We got people that are interested that really want to learn, and we're gonna build your pockets a lot faster because of this type of teaching style. We're not worried about a quick profit, even though a quick profit is gonna come. Put profits in the back of your head. Just worry about winning this game that we're playing. Don't worry about how much you're making right now. It's cool, yeah, but you gotta still put that in the back of your head. When you trade, you gotta go in looking at it like, you know, you got to trust your decision. Once you get to that point to where you're calling your stuff, you got to trust your studying, you got to trust your knowledge. It's something that the people that have build their accounts and will build their accounts, you'll know who did it because they put the time in, they listen, they did what they had to do. They put in their few hours a week. We're asking literally 3 to 5 hours a week on the charts. 3 to 5. That's an hour a day of sleep. You get up at 8, you get up at 7:37. 3 to 5 hours a week. That's all you really need to really get to 10,000 in the next 3 months, guaranteed. If you do that, you'll be at $10,000, if not sooner. I'm saying 3 months because that's really good still. That's really good. Probably more than a lot of people are making at their regular job, or somewhere close. And that's on the side, and you can still double everything in your life. So that's why we put money managing aside. With money managing as well, um, if we get people to really learn how to trade, they can start building their own money managing account. So what I'm gonna do is I'm gonna have an account linked to Kevin's with my own funds in. So I'll put like $300 in an account and have Kevin build it. I won't touch that for the next year. I'm just gonna leave it because that's just my investment that I put. That's my savings account right there. Then I'm gonna open up my own money managing where I get my own people. Kevin has his own people already waiting to get in his money managing that are strictly gonna do money managing. We didn't want you guys to do that because we understand not everyone in life is gonna want to learn forex. But if you put enough interest in it, which you guys have, it's going to be worth your time. Some people it's really not. Some people are just really want to make a profit without putting in much. They open up a savings bonds for it's the same thing, essentially the same thing. It's just opening up a savings account. It's their social security, whatever it want, whatever they want it to be. Um, then you guys get your own people. You start trading for them. People on the side. Family members. Hey, you want to get a join in forex? That's totally cool. But listen, you go ahead and I this is my track record for the last 6 months to a year. I built my account, at five. We could just say even $100. My $100 account was built to 15, 20,000 on this demo account, or you can show them a real account. It really doesn't matter. This is my track record. I can guarantee you these results. They invest their money in. You charge them anywhere from 20 to 40% of whatever you earn them, and now you are making a residual income without having to teach someone else, or you're just doing what you do every day. You're just finding people that are interested in you and trust you. I already have one person right now that I'm trading for. One of my coaches, longtime friend of mine. asked me, he's like, hey, I see what you're doing. You know, like he already has a family. You know, he has a set career. You know, he's a district manager for a school district or something like that. So he's busy. He's a wrestling coach full time. And he's like, here, I'm gonna give you $500. I want you to build this account. In the next, 5 years, we'll split it in thirds. You know, you can take out your third whenever you want it. I can take out my 40% whenever I want. Even though I'm not charging him 40%, I'm charging him like 10% because I really don't care. It's really just what you want. You guys sign your signed agreement, and you guys have your own little business on the side. We want you guys to become teachers. We don't want you to be stuck in this group forever. You know, we want you guys to branch off as the trader you want to be. We do have ways and things that people might be interested in moving forward. So outside of just trading, so now you get the money managing part of it. Quickest way to, before I get into the next thing, the quickest way to get to that $1 million, because that's our goal. In the next year and a half, I want everyone to be damn near close to hitting their first million. We're not talking about $1 million in trading, but $1 million where you can put in your bank account and still have a healthy trading account. So the key to this game is saving, but we want to put money in our pockets in every which way. So you have to have multiple ways of income. So what we have moving forward in the next 6 months, 6 months to 9 months, I don't want to say a year because that's a little too long. I want to get this started this year. We're going to be opening up our own brokerage. So basically, everyone uses a broker right now. It costs anywhere from $5,000 to $20,000, depending on how fancy you want to make your broker look, to get all your licenses. And what they do is they give you an MT4. They connect you to MT4. There's over 1,000, 10,000 brokers out there. They connect you to MT4. Your job is simply getting people's money to them on time and, making up your markets. We can get people that really want to learn different things at Forex. If you want to be a market maker and you want to learn that and you don't want to trade, that's cool. You don't have to trade. You can learn how to do other things, But, and a broker makes anywhere from 100 grand to $1 million a month. We can grow this. If you call Forex Broker Inc., they have an office area. They're probably sitting in a small office somewhere in Cali, in some rinky-dink office that you never know what it was, and they have 10 to 20 people working from home or wherever running that brokerage, all split in $1 million a month. You know what I mean? So, basically you get people that start on Forex, but hey, use my broker. We have good deals. We don't charge as much off a commission off of you, blah blah. Think about that. If you're making 20%, most brokers charging 35%. We'll charge 20%. If we make 20% off of, I don't know, let's just say 100 people's losses and whatever they deposit in or whatever they make, we make all that money. That's all to us, and we can split it evenly. You know what I mean? So this original 10, 15 people are really going to be people that are going to really branch into the things we get started in. So just start thinking about all this stuff you can do outside of Forex. Just outside of trading. This company has so much to offer. Take advantage of it. There's so much out there, and this is bigger than what you guys really think it is. Like, you guys will really start to see big dollars coming in if you put in the time and the studying. So before we get started, one more thing. Everyone get out their notebooks. I got everyone's assigned pairs. So I'm going to call out an order. Just unmute your mic and say if you have your pairs, which I know some people do. So we're going to start with Jason. I gave you your pairs, but let me know if you still need them again.
So USD CAD, Euro USD, and USD Mexican, right?
Yes, sir. Trey. You can mute your mic, Jason.
Gold XAU USD, and then am I still doing the mutual USD CAD and Euro USD, or just gold?
Nope, you're doing gold. Gold is going to be your specialty, and then your casual trades. Your casual is going to be what you just said, USD CAD and Euro USD.
Okay.
So you guys have 3 pairs. Everyone else will have 2 pairs. Because we want to get you guys caught up. Trey's a little bit more experienced. And Jason, he's been doing really good. I think he can handle 3. Some people I just want to handle a couple off the bat because I don't know where you guys are at. Some of you guys just getting started up. That's totally fine. We want you to get you something you're comfortable at. If you hit me up and like, hey, I got these 2 down pat. I'll give you a little test on them, ask you a few questions. If I feel like you're ready for the next one, because I don't want to overwhelm you. I want to make this as simple as possible. You master 2 pairs, you can make a ton of money. You can make more money off of your 1 pair or 2 pair that you learn and you master than you can off of 7 pairs. Honestly, you can double. So if you learn that and you'll just be trading on those pairs every day, whatever the market gives you. All right, here we go. Next in order, Craig. You ready?
Yep, I'm ready.
Your 2 pairs are going to be USD CAD and USD CHF.
Got it.
Okay. Everyone write this down. I'm going to go over, actually, I'm going to give everyone their pairs first before I go over kind of what to expect. Then if you guys have questions on them, you guys can ask Kevin to get more into detail about it. But I'll just give you what to look out for after everyone gets their pairs. Who else is on here? Tim. You can keep your mic muted, but your pairs are Euro USD and Euro GBP. Did you get that, Tim?
Yeah, I'm good.
Okay, cool. Kenneth is not here. I will send his. Ryan is not here. Anthony's not here. Josh just started, so he's not assigned anything yet. Craig, Tim, got everyone. That's everyone, right? And I'm going to be studying the Mexican dollar. I'm going to be studying that with Jason. And then I'm also going to be doing USD CAD and Euro USD. The only one that's going to really be looking at multiple charts is Kevin. I'll have a couple on the side, but I won't really be studying them. Okay, here, Craig. I'll give you Kenneth's. His is USD CAD. So same as you, USD CAD and Euro CAD. Give him something a little simple. And that's actually what Ryan and Anthony have. They all have the same pairs because we don't know where they're at. They're not as active right now, which is totally fine. Well, Kenneth is, but he couldn't make it. And I don't really know where he's at because he just started getting active. And then Trey and Kevin are going to be trading gold together, and they're going to be trading USD CAD and Euro as well. But of course, Kevin's going to trade what he trades, anyways. But so everyone's assigned something. So here we go. I'm going to go through every pair that was called out. Everyone write this down. No matter if you have this pair or not, put a star, highlight the ones that you do. So here's just like a definition of each pair. Look at these pairs like personalities. Look at them like people. They're not going to react the same. So you got to put time into every pair. Go backtrack yourself for the last year. On days like today where the market's still, this is the best time to study because the markets aren't moving. So take Friday afternoon off, take a couple hours on your Saturday, and you'll really. It took me 15 minutes to look at Mexican dollar to be like, hey, we're going to get 15,000 micro pips. And I'm going to show you that actually here. I'm going to start off with mine because after I'm done talking, I'm literally going to let Kevin just take over the rest. So I just want to get everything out that I have to say. So Kevin's going to do a lot of screen sharing and stuff. So, okay, thanks, Kevin. Can you mute your mic, Kevin, so it doesn't? Appreciate it. All right, here we go. By the way, iced coffee. That's where it's at. All right. Individual pairs. GBP, JPY. One thing about that to look out for is it always moves no matter what session. So it's one of those sessions that might be convenient for a lot of people. So you can make money in that, And Kevin will go more in detail about them. I'm just have small things that, just to kind of give you a head start of things. You'll see movements just by looking at the market. Look at the market before you ask questions. Look at the market. If you don't understand it at all, you really don't see your own. But when you look at your pairs and you look at the market, write them down. Let me or Kevin know. Be like, hey, I think this does this. What do you think? And then we'll be able to analyze you off of what you're doing. If you really completely don't understand, feel free to ask whatever you want. USD, and that's why we gave people similar pairs so they can ask each other too. You guys can compare. I mean, you guys we're a team here, so you don't have to just come to me or Kevin. You can go to whoever any one of you guys. We have faith in all you guys. So a lot of people, everyone's going to know something different. Everyone's going to have a different look on the market. So, okay. USD Mexican, that's me and Jason only. It moves a lot. We're talking over 1,000 micro pips a day, every day. It moves that much. So that's why we signed that for me and Jason. I think Jason can handle it. And it's going to be a pair we're going to be trading a lot. It's USD at MXN. USD MXN. That's the Mexican. USD Mexican or peso. USD CAD. Pretty much everyone will be trading USD CAD.
Justin, I think we lost connection to you.
Yeah, what happened? Justin gonna have to increase his internet. Alright, he's back. I think. Nope, he's not. Justin? Okay. Well, I think he was talking about the pairs and how they moved. So, in saying that, it's weird. I see his screen. On his screen, he's moving a little bit. Anyway, he said GBP, JPY. Then he said USD Mexican. The next one would be gold, which is XAU USD. XAU USD moves a lot as well. It moves over 1,000 to 2,000 micro pips a day, up and down. Doesn't move in one direction. It moves up and usually reverses back down to that area. Reason being is because y'all guys should know about gold. It stays around the same price. It slowly grows or slowly declines. It doesn't really move like a million pennies or grams per dollar or anything like that. So it has to basically retrace its movements because it needs to get back to the price that it was the week before or the month before, so forth, so on and so forth. What's another USD CHF doesn't move that much. It's pretty consistent.
All right.
Oh, okay, Justin's back, so I'm letting him finish. I did gold
right.
and I did gold basically.
Oh, cool. So gold, and the only one left is Euro GBP, which
I think we skipped USD CAD.
USD CAD double top or double bottom. And it has a lot of divergence, which we're going over today. That was the first one I went over, but it's okay. So we'll do that. Kevin will go over exactly what to look for in those and during his lesson today. So I'm gonna show you my analysis today. After I go through my analysis, I'm gonna let Kevin take over on his lesson, which I'm gonna be gone most of. That's why I'm going through what I'm going through right now.
Hey, Justin.
So, yeah, what up, man?
Do you have any comments on the Euro GSP, GBP or Euro USD, or we're just
Euro USD abides on levels. So we're gonna study level counting. That'll be a lesson with Kevin on level counting. So it'll be kind of like a side webinar that we just go over right away. It'll take him like 15 minutes to go over, and then you'll look up your own information on levels as well. Go out, Google resources, find resources out there and study. There's tons of informational videos. There's a ton of stuff on YouTube. Look at it all and take it for what it's worth. Euro GBP, that's one I think Kevin wanted to go through by himself. He was going to let us know because he didn't give me that one. So you want to go over that with whoever has that, and he's not here right now. So, oh no, Tim, go through that with Tim. He's the only one with Euro GBP.
Okay.
So Tim, Kevin will just type it in the chat, or he'll go over it during his lesson. So I'm going to go through the Mexican dollar here. I'm about to share my screen with everybody here. Screen share, entire screen. Alright. So this is where I'm at, guys. Alright. So a couple things that I see here. We always start on the daily chart. Question. If anyone does not know how to set their resistance and their support lines yet, please unmute your mic and tell me.
Fast question. Support and resistance lines are always done on day one charts.
Day one charts, hour chart, or day one 4-hour chart and the hour chart.
Okay, thanks.
They're stronger the larger the chart. So your 1 hour is going to be the weakest.
I'm not fully at the. I guess I'm not fully understanding how to set resistance and support levels.
Okay. Yeah, no problem, man. If you need extra help on that, we'll go through that in a one-on-one. I don't want to take up too much time going through that stuff because we got a lot of information to cover today. But if you do have questions on that stuff, I think most people I went through an individual webinar with. I know Craig and I just went over it the other day, which we'll go through it more, sharpen things up. But I want you guys to start marking up your own charts like that. So the first thing you do is you get your, like I showed you guys. So I'm just going to get into what I'm getting into right now. Also, we'll do on a trending market, so on an uptrending market or a downtrending market, you can get, obviously this is a downtrend, so this is going to be our diagonal. This is our diagonal trend line. So if you see this market here, it hasn't even touched this trend line, but at all. It's super strong. It gets close, and it does not want anything to do with it. So this is going to be the first time I think it touches, and after it bounces off, it's definitely not going to break. It's way too strong. If it breaks, it would be uncalled for. But I've studied the Mexican dollar back for the last 6 months, and it trends. Look at it. You can see this is clearly an uptrend. Clearly, it's very clear to see. It's as clear as day. All up. Look at that. Look how many pips this is. It's ridiculous. 20. Even when it looks like it's consolidating. Look at that. That's 23,000 pips. Even when it looks like it's consolidating, look, it doesn't look like it's doing much, but it's continuously going up. We're going to catch one of these. And when it reverses, it's obvious to see. The market really starts to slow down. Look something like this. But we'll go through that later. I'm not really worried about catching those huge trades right now. We're still going to get a lot of pips just off of our mini swings. So our swing plays are going to be literally like 2 days because it goes hard. This movement is going to be, you're going to be up 1,000 pips in a half a day. It moves. So keep that in mind. So on our first trade, this is what our first trade is going to look like. Let me zoom in a little bit. This is what our first trade is going to look like here. So our first trade, we're going to hit. So my yellow, I didn't mark the hour chart because right now I really don't need to mark the hour chart because look at all the resistance that I found, all the support that I found, and the red. That's my daily chart. So my red is going to be a stronger resistance. This was off the hour chart as well, so it's super strong. And it even lines up the same on the daily. This was on the daily, sorry. This was on the daily chart. The red's on the daily, the yellow's on the 4-hour. I didn't mark the hour chart, which would be blue. That would be my weakest, but I don't need it. I have so much within my strong points here. Even on the weekly, it pretty much lines up. Yeah, go ahead.
I think you know how to do it. Can you do something real quick, just real quick, so we'll know when to get in? Can you put out Fibonacci retracement real quick?
Yeah, that's what. See, I didn't want to set it up wrong. Which point should I go off of? This middle point?
No. You see that last push up before drop?
Right here?
No, down. Just go to your right, down. Oh, let me see. No, I can't share screen. But go to your right. Keep going, keep going, keep going, keep going.
Oh, right here, right here.
No, to your left. The next push up, the next push up. To your
right
left,
here?
the one to your left, that last push up right there. Not that one.
So I want to start this one?
Higher, close to your trend line. The one that's close to the trend line right there, higher.
Wait, right here?
Oh, let me see if I can do this.
I don't know. I have so many trend lines. I don't know which one you're talking about.
I know. Hold on, let me see if I can do it.
I think he's talking about that red line
This right here.
trend line.
Y'all see my screen?
Hold up. Let me get to your screen, Kev.
I see it.
Oh crap.
Let me see, Kev.
No.
Hold up. I'm gonna stop screen sharing. Kevin, go ahead and share your screen.
I
I'm gonna
can't.
mute my mic.
No. I can't because I don't have Mexican dollar on this computer. I was doing it from your screen. I was showing them.
Oh, okay.
So
Hold
I just
on.
forgot I was showing them, so I couldn't show you.
Hold on. Let me go back.
So yeah, go back to screen share and just look at the bottom where I'm doing it at. All right, this right here. You see my arrow?
I can't see yours.
Crap. Everybody else can see it though, right?
I can
Guys.
see it.
Yep.
It's right on your trend
Let me
line. Go to the left. Go to the biggest push down. Oh crap. All right, so you
Biggest
have that
push
level.
down.
That's right
Right.
there. Where does your screen go? All right, now that's one level. Go down to the next level. That's 2 level. Go to your 3rd level. It's the 3rd level. Go to the top of there to the bottom of where that is.
Well,
Other way. The bottom of the lowest point of the trend. The lowest point of
right
the trend
here.
line. No, it needs to go the other way.
Oh yeah, zero's at the top.
Go to your right. Have it at the end of that wick.
Right
All
there,
right,
right?
guys. Yeah, so it pretty much lines up perfectly. You see that 38.2
Here,
retracement right there?
I'm gonna delete my yellow. Hold up.
You see that
I don't need them.
38.2 retracement? Y'all guys see that? On his chart, it says 38.2. You have 0, 23.6, I think that is, and then 38.2. It's the 3rd yellow line going up.
Yeah, I see that. Yep.
Right here.
That's a big retracement spot. Usually in a trend, the market goes up to around the 38.2 and it retraces. Hold on, I wait till you finish. Okay, then it retraces back down towards a downtrend, and it actually matches up with his trend line. So, when you looking at this is the daily chart too, so it might take like a day or so. So maybe Monday afternoon, Monday night, it's going to retrace. It's going to retrace from there. It should stay consistent with the trend line. If it breaks the trend line, it's going to retest it, and then it's going to shoot up to the next retracement, which is the 61.8. All right, but that's all I wanted to say. Look out for that, Justin.
Oh yeah, I got it. So check this out though too. Let's even go to the weekly. This is a very high point in the market that it's been. It hasn't been this high in a very long time. So it's gonna look how this is the weekly chart. Look, this is a long period of time. I don't have my period separators on because it's too hard to do in the weekly. But this is a long time. This is each bar is a week. Just so you know. So this is weeks back. It trends that long. This isn't gonna break trend, and you can keep going back. It doesn't break trend, and if it does, it consolidates, and it's very obvious to see. But it trends. Look at this. This is damn near a few months almost. Trend. And it just stays. It goes one direction. It doesn't have any crazy just out of the sun. There's nothing. You're gonna catch it in a long and like really advanced. So this coming down, this downtrend is strong. It is strong. Okay, I don't really think it's gonna break. It's a possibility, but I'm very confident in that trend line. And this is the only time it's actually gonna touch it. So it's not really weak yet. If this is the time it could break, I don't think it will. If it doesn't, we're gonna have really good setups. If it does not break, we're gonna be set. What up?
So are you saying like you think it's gonna break down faster? It's gonna start trending down faster than a region that's trending up based on the angle of that trend line?
No, that's just showing this. this is just like your resistance, okay? Like it's not gonna get. My trend line is showing that I don't think it's gonna get past that point. If it doesn't get past this point, it keeps following my trend down. I'm gonna take off the fib for now, so you guys can see later. So you guys can see what I'm talking about. Zoom in. So this is the first time it's gonna retest this right here, okay? Once it retests, it's gonna bounce back down. This trend line is strong. The more this touches, when it gets a certain amount of touches, it's gonna break. But this is only the first touch, so it's either gonna, if it does not touch it, if it touches it and it bounces back, it's really strong. If it breaks it, which I don't think it will, because this is a really high point in the market in the last year, a really high point. So I don't think it's gonna break it. It's really, like I said, this market trends very, very long, so it's gonna continue trend. It's rare that it's just gonna break. It's a very, very clean cut market. It really shows what it's doing. It's just really fast. People can't keep up with it. So that's what I'm saying, which we'll go through individually if we need to. But it's just like your resistance and your support. So that's one reason why I think it's going to continue to go down. So now I'm going to go to the 4-hour chart. Okay, now it's retesting our line here. So we're going to go through this today. This would be called divergence. So if you look here, even though, look at up here, even though this looks pretty even, right? But if you look down here, you can see it's getting weaker. That push up is getting weaker. So I think this is going to bounce down. That's another reason telling me why, which we're going to go through divergence today. But just give you a visual of what it looks like. So our first play is right off of here. Depending on what price action it forms, which right now I'm not sure, but I'll know. I'll tell us when to get in. Once we get in, it's going to be on this candle down. Looking to get out. This is going to be our short-term trade. Let's just say we get a perfect entry. So I'm just assuming that we're going to get a perfect entry. I don't think we're going to get a perfect entry, but we'll get it. It doesn't matter. Perfect entry is the difference between just a few pips because we're going to catch it. I think it gets all the way down. Oops. To at least this level. I deleted all my lines, but I'm thinking we're getting 3,800 pips. If it gets down, yeah, I think it's getting down here. So I'm looking at the wrong market here. We're getting at about 3,600. Yeah.
Real quick, 4-hour chart. That is a reversal pattern. It's called a railroad tracks. Y'all can look it up. Called railroad tracks is when you have one engulfing going up, and then you have one around the exact same size going back down. It's called railroad tracks, and whichever one is the last one, it's the direction that it goes. Okay, that's all I want to say. So that's the 4-hour.
Which chart. This is a push down.
Yeah, that's the 4-hour chart. The hour chart doesn't have a reversal pattern yet.
So that's another reason for it to go down. So our long-term trade, I don't think I have it written down either, but our long-term trade, where's my play from earlier? Okay, so I think it can get down. I think it can retrace down to this level, which I'll check with my fib later. I'm not going to get into it right now. But if it does get down to this level, at least this level, this is strong. This is on my daily chart. So these levels are all strong. But this is free here. So I think we're getting a minimum of 7,000. A medium would be around 15,000 if it retraces at this level. I'm going to look at my fib on that too. And if it breaks all that and gets down to here, we're looking at 23,000 micro pips in a span of a couple days. A few days. Could be a week. But we're looking at a huge amount. Even on a 1 cent lot, that's crazy. Okay, so that's what I'm looking at for this week. I'm gonna go ahead and let Kevin get. So I'm gonna stop screen sharing. Kevin, go ahead and get into everything. I'm gonna mute my mic.
All right, well, gentlemen, you heard that. I'm excited. I don't know about you guys, but I'm excited about some major pips. Cause I am going to be putting dollars on that baby. All right, so let's go here. Let me get out of here. Oh, wait, I can't get out of here yet because I have to screen share. Everybody can hear me good? Yeah? Thumbs up, thumbs down? Okay, okay.
Yeah, I can hear you.
Alright, good. Alright, I don't have some pairs on here, but I have the ones that pretty much matter. This is a basic forex broker right here because I trade off the desktop. I don't trade off my laptop, so I can't show you all my like markings and everything. I'll just do it as I go along. Let's see. Oh, I had USD on here for a reason because we took this trade and it went against us pretty decent amount before it actually went in our favor. So let's look at that. Let's see what went wrong.
Hey, Kevin, you muted yourself.
I did.
You're good now.
That's weird. Alright, can y'all hear me? Can y'all hear me?
Yeah.
Alright, let's see. Now tell me if I mute myself again. Am I good?
You're good.
Alright. Does somebody have the time and the day that
You just muted yourself again now, Kevin. Now
what?
you're good. I don't know why it keeps doing that.
How about now?
You're good.
Alright. Tell me if I'm doing it. How about now?
Now, yeah, once you just did that, yeah, whatever you did, you did.
Okay, so I guess when I'm scrolling it mutes me. Am I good now?
Yeah, you're good.
Alright, so when I scroll it mutes me. So I know not to talk when I scroll. Alright, so LUSD, can somebody pull up that trade we took? I think it was somewhere around here, but I'll need to know the exact time so I know what went wrong, what I can do differently to
I want to say it was like right at like, because when the markets or when the news released at 7:30,
yeah.
we took that trade maybe I want to say 10, 15 minutes later.
Yeah, I have one that closed out around 7:55 on the 31st.
Look at your history. It will tell you what time you took the trade.
Yep.
I believe.
Yeah, it was between 7:30 and 8 a.m. on the 31st, I think.
7:30 a.m. Let me do this. Show period separators. Alright. So this is the 30th. This is the 31st. You said around 7 to 8 a.m. So that's New York session. That would be between these two times. Let me make sure. It's 5, 6, 7, 8, 9, 10, 11, 12. 1, 2, 3, 4, 5, 6, 7. Okay, so this must have been no. If we got in right here, it would have been a good trade. You show us the 31st, because if we got in right here, that's a good trade. Because we would have got in right here, the very next candlestick.
It wasn't the 31st, was it?
Yeah, it couldn't have been the 31st. It had to have been the 30th. It had to have been the 30th.
I'm showing my first one 03/330 on the 30th.
03/330 on the 30th. So that was London. That was right here.
Even that would have been good. So yeah, I don't know.
Do I have to look? Hold on. Give me a second, okay? I'm gonna look on my phone to see when did I take the trade. All right, go to account history. Where are you at? LUSD. LUSD. No, I took some more after it went up. Okay, the first one. I got some good entries on LUSD. I must have told y'all like a second late or something. Hold on. Okay, so 331, 1127. So that's 5, 6, 7, 5, 6, 7, 8, 9, 10, 11, 12, 11, 11:30. Okay, we had a horrible entry. horrible entry. Let me make sure this is right. Might be in the AM. Yeah, it had to be in the AM because I got in at 76,620. I had a good entry for that little bit of time. No, I didn't have a good entry. It was a bad entry.
It's weird. I don't see it on my history, but I know that we all try to get in around 76,600,
Right.
and you're expecting it to drop, and it took a while before it happened.
Yeah,
I
and
think it did happen, but it was like between midnight and 3 a.m.
it happened late. Like this
Hmm.
this kind of like, I don't know, it took a lot of people out, this move right here. And let me do this. This is what I usually have, guys. I have an indicator, stochastic oscillator. Blah 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 blah. I do it normal. Let me show you what I seen and why we took the trade in the first place. It was, for one, let me do this. Supply and demand real quick. You see this big wick right here? This is a supply zone. Supply zone, it's not going to break past that. It's always going to test it, and it needs a big, strong, engulfing bullish candle to break that. It's not going to break it by any small candle. So if you see little candles touching it, don't be scared if you take a sell on that. But you need a reason to take that. That's one reason. The second reason would be this reversal pattern right here. I really don't know exactly where we got in at. I don't know why I can't find it. But I think it was somewhere in this area. You know what? No, it was somewhere in this area, and it was, yeah, okay. I know exactly where we got in at. We got in on this candlestick. And the reason why I say that is because this divergence right here. And I seen that, and that's why I said take the sell. And I knew it was going to be a long-term sell, which it hasn't even done what I thought it was going to do. I guess the news really pushed it down. Okay, yeah, news pushed it down. It must be an uptrend overall. Let me look back. Yeah, it's an uptrend overall. So, mistake number one, don't ever sell. Always go with the trend. Don't try to sell unless you have the fib showing, and I didn't have the fib showing. I didn't check my fibs. That was one mistake by me, so I'll take the blame on that, guys. Sorry about that. No, I'm doing Fibonacci. Stop it. Alright, so yeah. What would have been the right move to do in this situation was to wait. Wait it out. It was divergence right here. The perfect entry would have been right after this candle, so the top of this candle, which would have been 76,947. We would have rolled it out to the right here, and then we would have got out. That would have been exit point. So that would be 50 pips. That's what I planned, but it didn't quite happen that way. So lesson learned for me, and hopefully it didn't kill y'all guys too much. Don't kill me. Can y'all guys hear me still?
Yeah, you're good.
Okay.
You're good.
Along with the two
All
big
right.
ones outside.
Alright, so just showing you just quick right here, something to look at for next week. As you see, this is a supply zone. Is respecting it really strong actually. Touched it once, big push down. Touched it again. Well, didn't even get quite there. Really big push down, but that was news though. News did that, had to. It had must have been that news for USD that I was talking about before.
Hey, Kevin, can you kind of explain news, like timing and what that does or what it is?
Okay, so one thing, if you're going to be a trader, one thing you definitely need to have on your computer or open and either on your phone is let me see on my phone real quick. I have it. But for the computer, it should be Forex Factory. It gives you all the news for the pairs and what time they're going to hit. So, what else about to do? What I was about to do? Oh, my FX book. If you have a phone, go to my FX book for like your Android or Apple or iTunes store or iStore, whatever it's called, Apple Store. And download that because it will just give you notifications when it's going to hit and when it hits. So yeah, you'll go find that out, and then you'll see what type of priority it is. If it's red priority, that means it's high impact. I recommend not to get in the trade around that time because the markets move really volatile, as you see right here. Had to push up, push down, even though this is not really as volatile as news really hit. Like this was kind of weak. I was expecting something a lot bigger than this, but it is what it is. Only reason it's doing that is because I expect our USD to drop. It's been up at a high level right now. It's going to make its drop next week. I guarantee it. So that's why I was saying long term trade with this. I thought it was going to drop the ending of third Friday, but it didn't. It hit news, it dropped and came right back. And it's consolidating. The market always consolidates before a big push down or a big push up. But anyway, back to where we're supposed to be getting to. Let me go over indicators, and this is what I mean by divergence. Divergence is one of the main things I look at when I look into a trade. I look at supply, which is this, support and resistance, which will be, let's say, all right, this is a support, resistance.
Hey Kevin, so is that gonna push down again? Do you think? If it's,
AUD/USD.
yeah, are we gonna make a play on that one this week probably again?
More than likely, yes. It's definitely gonna push down. I can tell you that.
Yeah.
It's too high. If you look at the longer time frames, it's got up there.
All right.
Let's look at this real quick. Guys, something to look up on your own. Elliott wave, the Elliott wave theory. It consists of five to seven waves on small pair, well, 3 to 5 small pairs that doesn't move that fast, and 5 to 7 or more on big pairs that move fast. This one is like in the middle, so I believe it's going to be like 5 to 7 pairs. Movements. You have a push up, a push down. So this will be one wave. This is two wave, three wave. Let me see. No, it's not a high. 3 wave, 4 wave, 5 wave, 6 wave. This is the 7th wave. That's why I said it's gonna go down. And confirmation with that, you zoom in. You're getting a bunch of dojis at this resistance line right here that I just made up. You have a doji right here. You actually have doji / evening star, which is a reversal pattern. And this one is now forming. It didn't finish yet. It should finish tomorrow around 12 or 1 o'clock in the morning. Well, not tomorrow, but Monday at 12 or 1 o'clock in the morning. So,
Yeah. Hey, Kevin, quick question.
yeah.
At some point, can we just like define like the Morning Star like that? I know I've heard you and Justin mention that and something else a couple of times, so I just wanted to write it down.
I have a picture I'm going to send on the chat. It has the major ones that I talk about all the time and the names of it. I know I need to stop listening to this. What is this? I'm sorry. Okay.
That
Hey,
baby
Kevin.
elementary level has all those candlesticks. If you go to Baby Pips and then the elementary,
Pips does have all those candles.
for all
Look on Baby Pips for all the reversal patterns because it actually has a class, I believe, that's just strictly reversal patterns. But that would be a good place to look. And also, I'll send a picture to y'all guys' Facebook, and you can download it or save it on your phone from there and just look at it from there. But somebody
There's
called my name.
Yeah, Kevin, I was just gonna recommend for you guys, because I just found this actually on Google. It's an online tutorial, but it goes through almost every single type of trend. Even it's pretty much a beginner's guide, but it'll cover double top or a double bottom,
Yep.
and then a
Triple top.
triangle, head and shoulders,
Head and
Fibonacci.
shoulders, yep. Fibonacci.
Here, let me
Yeah,
find what I looked.
please send that.
I was about
Yeah,
to say
hold
it's
on
good
one
for y'all
second.
guys to look at. Y'all can definitely look at that and y'all have a full understanding of that.
Yeah, I'm gonna
As you
send it to you guys.
Yeah, as he do that, I'm still gonna continue explaining what I was going through. Cause it's 9 o'clock over here. But just real quick, guys. What I was getting into. Okay, yes, I was just basically going off of my opinion on what's going to happen with ALUSD. Yeah, it's respecting the resistance line right here, guys. As you see, it touched it one. Well, tried to get it on that one push. It's the second push right here, got rejected. Third push, and this is the daily. So just show you guys have an idea with that. And then there's this final push, which is kind of like the fourth push. And now it's going to go down. It's going to go down. I actually see something happening on this next candle for it to push down. And when it does push down, things going to push down for the week. I should get somewhere around this range. Somewhere around this range. Alright, so let's go. Okay. Zoom out. I'm going to show you guys divergence and the indicators. So this is the hour chart right here. You see some divergence happening right now. Okay. Alright. I just seen divergence. Okay, bam. Divergence right here. So, y'all see my indicator sheet right here? Hello? Guys?
Yeah, we see it.
Okay.
Yeah, I'm here. My bad.
Yeah, so this is my indicator. This is the indicator, stochastic oscillator right here. You have a, man, come on, crosshairs. This is a push up. On my indicator, it's showing that it's overbought. Now, normally, if it stays in that range, overbought, it can just continue going up. That doesn't matter. But in a situation where right here is overbought and it's reached a peak, went back down, and it pushes back up and is lower than the overbought of the last push, that's divergence. That's clear divergence. And if you didn't think that was the part of divergence, you could have looked at this. You see these two spots right here? This one and this one to your right? Y'all see that? And this is actually a little
Yeah.
head and shoulders for whoever was talking about head and shoulders. It's a little head and shoulders right here. But these two spots right here. Now if I do the same on here, which is this area, and then look at this area, what you see that's different. It's the same, basically the same area. But this is a lot more oversold than this. Meaning that the buyers lost a lot of strength after this final push. That's clear divergence. Clear divergence. And what you'll be looking for after that, you'll be looking for a reversal pattern or price action. Boy, hopefully I can find it again.
Right there, you just passed.
Yeah, I just passed it. But yeah, we wouldn't have caught the whole move unless we would have got in right here, which most likely I wouldn't have told you to get in right here. Oh, you know what? It's divergence right here. Zooming in now. You see this right here? It's overbought right here on this railroad tracks, which shows a reversal pattern, which we might have got in on. And then you have a push higher right here, and it wicked. So it has to be some type of resistance somewhere right here. And it's lower. So we could have got this whole move. We would have got in after this candlestick right here. Would have got in somewhere in this area. Would have rolled that all the way down. But that's divergence, guys. And
Hey, Kevin. Oh, sorry. With your indicator down at the bottom, that chart, the lines, can you just explain what that blue line or green line, whatever it is, and the dotted line is?
Okay, so this white line is the market. There's a white, no, make sure I'm saying this right. Hold on, let me look at it. Time, blah, 53333. Okay, so yeah, this is the trend. This shows, the red line shows the trend. The white line is the actual market. where the market, how the market's moving. And this 80, the line that has it right on the 80, anything above that is overbought. It's just the bears buying pressure. And then under the 20 is the bulls buying pressure. You should actually have one in the middle for 50 to show like basic consolidation. So I can just do it like this, somewhere right there. That was close, 48. Okay, that's close. I'm gonna get it. Anyway, just think that's 50. And as you see, areas is consolidating. It shows right here, consolidation. It might have moved up a little bit, which is that. Moved up a little bit, which is that. Pushed down, which is that. So pretty much stays true. Another one, you have consolidating. It's not really going above or beyond or below it. Staying within the area, consolidation. But yeah, that's pretty much all it is. It's just a stochastic oscillator. It shows the trend, which is the red, showing you how the market is moving. And then this is the actual market, the actual candles that's moving right now and how it's going. And then you have the overbought area, the oversold area. So yeah, back to the divergence. So even if we didn't catch it right here, we would have caught it right here because I would have seen the difference in between this area and this area. But you want to do it as soon as you see it because that's the best time to get in. Best time to get in. So you would have got on it right here. See how many pips is that? This is in February. It's 168 pips, which would have been 1,680. Depending if you're doing 10-cent lots, 5-cent lots, that would have been about $50 for you guys. 50, $75 for you guys. That's a pretty good trade for you on a 5-cent lot. And actually kept going down, went down a little bit more. But that's typical divergence right there. If y'all want me to show you again on another market, let me know. Wait, y'all can unmute yourself and just tell me if you do.
Kevin, I guess like a definition would help. Like, is divergence when a certain pair is overbought or oversold?
See, that's the thing. That's why it's kind of hard to explain in words, and it's much easier just to show because it's kind of hard to explain that scenario. Basically, divergence is where an area that's overbought. It's an area that starts off overbought, pushes past that point, but on this indicator shows that it's not overbought. It's lower than the previous overbought area that's lower. You understand what I'm saying? Like this part right here is lower than this, or better yet, this is lower than this, but on the indicator it shows that it's it's not overbought, meaning that it gradually lost strength. Even though it made a final push right here, it lost strength. So that's your divergence. It's overbought right here, which is these two candlesticks. It dropped down, made another push up, which is higher than the last two candlesticks, but it doesn't have no more power. It lost its power, so it's even less powerful than it was on its last push. So it's
Okay.
gradually lost strength, even though it shows the opposite on the chart. Like right here shows that, okay, if you was just strictly looking at this, don't even look at the candlestick chart, just look at the oscillators. You'll look at this and be like, oh, the market must have been high here, low here, medium high here, low here, high here, lower here. But when you look at the chart, you'll see that it was high here, but it was higher here, which is here. So you say, whoa, something's not right. And you're right, something's not right. It's about to drop. And that's what happens. Almost, I'll say 8 out of 10 times, you can strictly trade off a divergence and can be a winning trader. But we don't do that. We don't trade strictly off a divergence. I want y'all to trade off a divergence, supply and demand, and support resistance. If you trade off of those things together with that, it's just real powerful. It's real powerful. I mean, it's a lot more things that comes with it as far as like, you can learn other things like Fibonacci, which I'm going to actually show you guys once I find a good example for it. Guess y'all probably already have notebooks out, but let's do. I'm really mad I don't have gold on here. Let me see if I can find gold symbols. Oh boy. Okay, okay. There we go. Mexican dollar, Mexican peso. I'll show that. Where you at, gold?
It's Kevin, while you're looking for that. So the same would be true for the divergence on the underbought points as well, right? And
Absolutely.
and that'll be a buy. Okay. Yep.
It's just a reverse. It would be the same. It will look the same, but just in reverse. Oh crap. Let's go. Where you at, gold? Go, 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 go. This is really like taking forever. Yeah, I don't think I got gold. I wanted to show you on gold, but it's blah blah Australia. Alright, I guess I can't show you gold. Anyway, let's do okay, USD CAD, right? Is USD CAD? No, Chinese. It's one of these C's. There we go. Okay, so going toward USD CAD, I'm gonna show you some Fibonacci real quick. Did y'all hear that or no? Because I was moving.
Yeah, it's not
We
mute.
didn't hear you.
Okay,
Or I didn't hear
I
you.
was saying that Fibonacci is so powerful is that if we would have used it for the news that happened right here, we would have caught the whole move and know when to get out and get in on the sell. So let me show you. Get your pen and paper out. We'll get your pen and paper out real quick. So we have it right here. We'll start it up somewhere in this area. Alright, so this is how I do Fibonacci. You can do it the opposite way as well, but it works good for me this way. Typically have the zero. Well, when you're trying to find the end of the market, let me do it like this. Alright, so this is a downtrend right here, right? Downtrend, guys. Yes, no, maybe so.
Yes.
Alright, downtrend. So I would have the zero at the top. I'll put the zero at the top, and I would have done it like this. Let me show you why. Alright, my points of interest in this right here. You're gonna have to write this down because they don't have them on the basic Fibonacci. Areas of interest on Fibonacci: 38.2, 61.8, and right next to 61.8 in parentheses, the holy grail of Fibonacci and trading actually, 78.6, and finally the 88.6. Those are the key points, or PRZ, which is point of resistance zones. Point of resistance zones. So, alright, what we've done right here. Well, let me start it off first by this. Fibonacci on every, on a trending market, right? On every push, like say none of this. Oh, let me stop. Say none of this happened yet. None of this. So not this push down. None of that happened yet. Just say this push up happened. I'm gonna have to zoom in because it looks so small. Can y'all see that? Oh crap! It did until. Can y'all see that better? Yes. No.
Yeah, you're good.
All right. So I'm gonna have to make it a little bit smaller too. So this is one push up. That was well. This is one push up, push down, push up. So that would have been one that you would look at the Fibonacci. But it's so small that I wouldn't even waste my time. I would just wait for the next drop. This is the first drop for me. Yeah. I don't know if y'all can see that. This line right here. And like I said, guys, the first number I gave y'all was what? The 38.2. It didn't even quite test it, but it got close enough to it, and it got rejected both times. So this, in conjunction with your support and resistance zones, where I think you have a resistance right here, it's pretty much on the money. So that right there, you would have had your resistance line right there, or support and resistance, because you see it supported that spot right here, that spot right there, and resisted right here. And all it does, if it breaks support, it broke support, it retests it. Got retest right there on the push down, went down, retrace close to the 38.2, which is next to the resistance line. Since once support becomes resistance, double tested it, second wicked up, drop down, drop down. So yeah, 38.2 is write this on next to 38.2. 38.2 is the biggest push out of all of them. 38.2 strongest retracement. You can write next to 61.8 most consistent retracement. And the reason why they use the 61.8, the 61.8 is like a holy grail number of life. If you measure your, I believe is your arm to your, your elbow to your wrist, and then measure your hand, the whole hand is, I believe, 61.8% of your forearm. So yeah, 61%.8, something like that. 61.8% of your forearm. And it's like that with your whole arm. If you measure your forearm, so like your shoulder and your bicep, it's the same thing. It's weird. It's weird. But that's why they use that number. That number is like a secret number of life for some reason. I don't know why. But let's go back into what we was here for. Alright, so you've been looking at the 38.2. Like your first interest would have been 38.2, and you were saying, okay, boom, it hit the 38.2. It's time to sell it. You would have got the confirmation right there. I wouldn't tell you to sell it right on 38.2, but I would have told you, alright, if it's bouncing off of it, if it bounce off and give another push down, get in on it. You would have got in on the next candlestick. And basically caught that whole move. Next push down from there to there. You do it on every push. Like you're looking for, on a downtrending market, you're looking for every push, because you're trying to put multiple sells, multiple buys in on a market without it going against you as much. So the next one would have been right here actually. Next one would have been right there. And what's another one I told y'all guys? 78.6, right? We touched 78.6, drop down. I mean, it's pretty simple once you get to know it. And oh, in order to add these numbers, because they're not going to be on your Fibonacci, the 78.6 isn't, 78.6 is not going to be. What's the other one? I have 128.0. That's not going to be on the Fibonacci. And I think, and the 88.6 is not going to be on the Fibonacci. So all you have to do, you right click this actually. You'll right click it. Let me exit out real quick. Show y'all guys again. Right click, Fibbo properties, Fibbo levels, and just go to add. And then you can add them. I'm not going to type it because I already did it. But you're right, exactly like this, guys. So when you go to add, you have to do this one first. Matter of fact, I will do it for you. Backspace. You have to type for this one where it says level. You have to type 0.786. Then this one, you'll type it as seen 78.6. This side right here is just a description. This is the actual percentage of it. So make sure you get this side right. If you get this side wrong, it's okay. It will show wrong, but it will be right at the line. And that's how it will show up once you write it this way. It will show up like that. Oh, well, it will be at the right spot. And if you write it this way on description, it will show up like that. So you'll do 78.6, and then the same thing with see how I got 88.6? It's 0.886 because it's percentages. It's not 100%. That's why it's 886 with the point before the 8. It'll be 0.886. You have to write 0.886, and then for 128 retracement, and I'll tell you why why you want to have that in a second. It'll be 128.0 for description, and then 1.28. And I think that's all of them. Yeah. Alright, so you'll just go there, add, well, you'll go to add, type those in, type OK, but you can type all of them in at once on another, you can type all of them in at once, like I did that one. I can click on another 0 and type my other one, and then so on and so forth. So let me X out of that. Alright, so say you're trying to figure out where to take profit. This is what comes into play. So you will continuously do this. Like this is the top of the trend, start of the trend right here. You continuously do this. You will say, okay, another push down. You will start at the last push. Like, see, this is like the last push. Say that just happened. None of this right here, none of this happened yet. So you'll look and be like, okay, let me make it even better. Okay, that makes it easier a little bit. That makes it easier. So you don't have to see the right side, you get to see what I'm talking about. Alright, so you will have it at this push actually, because that was the last push down. Your first point of your first take profit actually, if we do it the right way, which is right here, your first point take profit on a retracement is 88.6. So say you got in on a sell right here, you're looking, I'm messing up big time. I'm sorry guys. When you're doing retracement, you would do the 0 from the top. Alright? You understand?
I'm still there.
Okay. When you're doing retracement, you would do it from the top. When you're trying to find out where to take profit, you're looking at these last 2 to 3 numbers right here. Like this is the final push. So you're trying to see to take profit at the 128 or the 161. So say this is a push down right here, and you're like, okay, boom, it went past this mark. Let me keep it right here to see what happens at the 128. And you see on the 128, it did have some resistance, moved up a little bit, it kept going down. So then you'll move the market over, and then see if it gets to the 161. And look what happened. It got exactly to the 161. Made a push up, and it is either going to do one or two things after that. It's either going to resist like it did and drop down even further, continue its trend, and then you would just go down to your next point and do it all over again, or it would do this. It would bounce off of here, boom up. So it kind of did that, and what I tell you about the 61.8, it's the holy grail of Fibonacci. It bounced right off the 61.8. So like I said, and I tell you, this candlestick right here is the news. Like I said, the news knows exactly, the market knows exactly what's going to happen, and it makes its move before the news even hits. The market knows what it's going to do before the news hits. It doesn't matter at all. And I can tell you this, especially for USD CAD, news go with the trend. The news always goes with the trend. What happened? This was a downtrend, made this flip, which I'm going to be mad if this is actual midweek reversal. That's why I try to tell y'all guys to get in earlier, and then I say get out because of the news, because I didn't want y'all guys to catch this retracement right here, because I think we got in somewhere in this area. It bounced up and then it retraced back. You would have lost all your profit. I seen that 61.8 retracement, but it moved so fast. It usually moves so fast that you wouldn't been able to take your profit. You would just been stuck on the retracement. So that's why I basically told you to get out with your profit. But
Quick question.
yeah.
So Fibonacci is kind of like just like a helpful predictive indicator where you would set it up and kind of watch where things are going and use it to kind of figure out when you're going to take profit and whatnot.
Only use it on a trending market. Only use it on an uptrend or a downtrend. Don't ever keep it up just to have it up, because it's gonna mess you up big time. Especially if you don't like study it and master the Fibonacci. If you didn't master the Fibonacci, you're gonna mess yourself up. So yeah, you would have kept this up right here. Oh, excuse me. You would have kept this up right here. Found your take profit. This is take profit 128.0. Your second take profit is 161.8. Second take profit, always get out all your positions. Don't ever keep a position open after 161.8. Only situation you'll do that if it boom past it. Then that means it's more waves to go. So if you did your Elliott wave, this is what I want y'all to find out. Elliott wave. You have one right here. That's kind of like 2. It's a push up. 3. That's 4. It's a push up. 5, 6 push up. 7. What I say? 5 to 7 waves, right? Before a reverse. The reverse versus about 1 to 1 to 3 waves on the reversal, which is this is the reversal right here. Like Elliott wave is on a trending market. It has 5 to 7 on a strong trending, well, a medium trending market. 7 to 9 on a strong trending, and then 3 to 5 on a small trending market, not that big of a trending market. And then after the trend is over, which I believe this trend is over, it makes 1 to 3 waves in reverse. So this is 1 wave, this is 2 waves. I think it's going to bounce off and go back up, make a 3rd wave. Then it's going to consolidate, and then it's going to continue making this move. It's either going to go up or it's going to go down. I can't promise you where it's going to go on that one right now. I think it's going to go down, but we'll see. That's to be determined. Or this can be this final wave right here. This can be this final wave, and it can just consolidate. But what I just wanted to show you is that the 61.8 is really strong. It's not as strong as the 38.2, because if it was the 38.2, it was shot down. It was shot down back down here, because the 38.2 is a really strong retracement. It pushes it. It basically smacks it and tells it to go away. 61.8 is kind of kind. It makes it go down, but it don't forcefully push it down. Kind of goes like in a zigzag diagonally. 38.2 basically pushes. It'd be like a big engulfing candle downward. So yeah. Anybody else want me to use a different chart or something for the Fibonacci? Just trying to get y'all used to the Fibonacci retracement so you guys can oh, another thing, Fibonacci retracement is on the opposite direction. If you didn't catch it from there to there, you could have did this. That's the highest push right there. And you'll be looking for, oh, actually, that's a push. So it's at the 78.6 right now. It should go up from there. It should. That's what I'm looking for. But we'll see. We'll see. And if that wasn't the right, this is where Fibonacci get tricky, because you got to find the right push. So these are 2 areas right here. You're going to have to find out which one's the right one. So what I usually do, I do this. I go here. I see that as resisting that 78.6. I'll just draw a support line. Then I'll move it to the next spot, which is the bottom. And I'll look and I say, okay, 61.8 is right there. And that's also a support line, and then I delete it. I delete my fibs, and then let it rock. See what happens. See if it bounces off of here, or if it bounces off of here. If it breaks through that and bounces off of here. But I believe it's going to bounce off of one of these two areas. I'll look for price action and divergence. There's none yet. There's no divergence yet.
And Kevin, I got a question real quick.
Yes, sir.
So when you're looking at those two lines, it's like just the very first bounce, that's going to tell you which area was the correct Fibonacci, or are you waiting for a couple bounces? Or is it just going to be like right away you'll know?
It's usually a couple bounces. It's never really like one clear bounce. Usually get a couple. Mostly like one. It depends. See, it depends. If it's a consolidating market like it was right here, consolidated before that big move on the news,
Right.
drop back down, and I think it's going to continue. It might just continue consolidating, bro. To be honest with you, like what we got, one push, two push, three pushes to that this support right here.
Yeah.
Already had a decent amount right here. So this market might just consolidate to Monday or Tuesday. It might not be no move until Monday or Tuesday. I'm just going over all of my predictions. For the midweek reversal with this pair, it's going to be a buy. I can let you know that right now. It's going to get somewhere around back to where it was. It's going to get somewhere around up to here. And after that, the week after next, it's going to go down.
All right.
So while we're on the topic of the downtrend here, or an uptrend, doesn't really matter. You mentioned you want to put in multiple buys, right? So if you know that you're winning on trades, you want to put in multiple buys. What points would you look at to do that?
All right. So now that we're looking at this, say we got in, we was lucky, and we got in after this candlestick right here, this small candlestick, reversal pattern candlestick, evening, morning star. We would have got in right here. I mean, we would have had some drawback. Yeah, we probably wouldn't have got in right here. We probably would have got out, because I don't like anything more than a 30 pip loss. I usually have my stop loss is tight. So yeah, we probably wouldn't have got in right there. Maybe the next candlestick. So next candlestick, entry zone. Say we would have got in right here, right? And we would have rolled it up. Would have took all that. Would have stayed in. Would have stayed in, because even this drawback, even though it was like let's see, dang, we lost 1,000 pips of our profit, 1,000 micros of our profit. We expected to go back up from there. Reason why, the Fibonacci will show us. Now we will look to get in on that 78.6. This is the 78.6, and this is 61.8. Or is this the 61.8? I think this is 61.8. I forgot I wasn't. Yeah, no. This is 78.6. Sorry about that. This is 78.6 retracement right here. If it bounces off and it shows divergence, which will be right here, we will get in on a buy. We will get in on a buy right here, because that's our retracement to get in on a buy. But if it breaks through and touches here and then bounces off, we will get in on the 61.8. So that's what we mainly use in the Fibonacci retracement for, is multiple buy-ins or sells on those retracements. You see what I'm saying?
Yeah. So we would have that original one that we would have wrote out, and then you place another one when you know it's going to bounce up after it tests the support or resistance, right?
Would have been getting on every retracement that we can get on.
Right on. Got it.
Yeah, because that's the safest place to get in. It's not safe to get in while it's going up. Like say I'm like, okay guys, buy down here, and we all buy down here, and it's a perfect spot. It's not good to get in right here. It's not good to get in right here. It's not good to get in right here, because all that can retrace on you. I mean, even though it didn't quite retrace right here, but who knows? It could have retraced down to here. It could have retraced down to here. So you don't want a position that you're holding when it's retracing down to here. You want to have a little pullback on you when you get in on the trades. You want to get in right here, so it's basically no pullback. Free trade plus the pips that you caught down here. That's where most of the money come in. Like you get in on You get in at good positions, and then you just stack, compound, compound, compound. Get the most money on trending markets. That's where all the money is at, on the trending market. It's not a lot of money on consolidation. I mean, you can scout consolidation, but who wants to scout consolidation every 30 minutes? Not me.
So so basically we're looking for our first buy on any kind of reversal up or down, and then after that we're just going with buys that are going with our trend.
Yes, you never want to really trade against your trend. I mean, once you become really good, like me, I can get in on sells and buys because I know when the market's going to reverse on a sell, or trace on a sell, and when it's going to go up on a buy. But until you get to that level, you're just going to go with the trend, which is buy, buy, buy. On a buying market, you buy, buy, buy. Selling market, you sell, sell, sell. There's still a lot of money to be made doing that. So don't get discouraged that, oh man, I can't get the sales with the buys. You're going to get a whole bunch of buys with those stuff. I mean, with the buying market. You're going to get at least 4 to 5. 4 to 5 at 5 cents, 25-cent lot. You get, what, 1,000 to 2,000 micro pips on the trending market. That's either $250 or $500, guys.
Yeah, no, I'm good on just sticking with one direction for now.
So,
And you can, I mean, technically, well, if you're looking at something and the market responds in a different way than you expect it to, you would use that.
that's
Like
what
if
your
you
stop
were in
loss
on a
is.
buy, right, you would do a sell at that point to probably counteract your losses.
Uh, say that again. If it,
So let's say we expected it to bounce bounce back up, and we called a buy, and
mhm.
then it just the bottom drops out, right? So then you would probably try to throw in a sell in there to recoup some of that.
if I wasn't in at the beginning of the set when the sell happened, or
Mm,
like a candlestick after the sell happened, I'm not gonna get in the middle of the sell. Never do that because it's too much that can go against you.
yeah. Okay.
You never want to get in the middle of a move. You get in the middle of a move, you're too late, and it'll
Yeah.
stop you out.
Okay.
Because what the market does, y'all guys can write this down or not. The market tries its best to pull stop hunts on you guys. Stop hunts is basically stuff like this. Let me show you. This is clear resistance right here. It's clear resistance. The stop hunt would be this. This is the stop hunt. You see how it got resisted right here? And then on the next push down, it's a whole candle that went past that, and then it went gradually past it. Most people, it's a stop hunt and it's a fake out. So this right here would be your resistance. A lot of people, traders, once they see this, they're trying to get in on a sell. So they'll probably get in on a retest of that uh, support slash resistance right here. Once it touched this area again, they would probably got in on a sell. They would be like, oh, I'm winning, I'm winning, I'm winning. Then what happens? Boom, they losing. They losing, they losing, they losing. So that's all that is. It's basic stop hunt. But that's something you will find out and you'll learn, especially once you get in trades. When you get in trades and you see that trade going against you, like, man, what's going on? I got the perfect entry. You do got the perfect entry. You just got to endure that little 15 pip stop hunt. It's usually 15 pips. Let me count it out. USD cash probably a little bit more because of the fact that it's a more volatile pair. So let's count it out real quick. It's a lot more volatile. That's wow. It's 54 pips. So you've been 50 to 54 pips in the negative, not even counting the spread. So that's probably about 60 pips in the negative. You do not want to be in the market getting 60 pips in the negative. All right, so that divergence for a buy that you was talking about, was it Craig or somebody else? Who was talking about that?
Yeah, that was mine. Yep.
Okay, so you see this right here,
Yep.
and this is and this is also shows you that it was a stop hunt. This right here is oversold, is at the 20. Like, oh man, it's oversold. Even right here. But anyway, this here oversold. Like, oh man, it's oversold. I'm about to buy this. But you gotta wait. You gotta wait for confirmation. You gotta wait for another push down to that area. Boom. The stop hunt right here. It's at the exact same spot basically. Exact same spot. And it's lower. Well, no. Yeah, it's lower. physically on the chart, on the indicator, it's around the same spot, even though it's over 50 pips below it.
So that would be
Divergence to tell you that, okay, I'm looking to get in on a buy. This is going to flip on me. That would be the only time. That's why the Elliott wave is so powerful. You'll count your waves out. You'll be like, okay, boom, that's 1, 2, 3, 4, 5, 6, 7. This is the 7th wave. Now you're looking for a reversal pattern because you know it doesn't have that many more waves to go. If it does, so be it. But usually 5 to 7 waves, you're looking for a reversal. So you would have got in, got actually triple bottom on the hourly. Bam, 1, 2, 3. You've been looking to get in. Been looking to get in because this is a reversal pattern right there anyway. So you've been looking to get in, you got in, and you wrote that out. And now we're waiting to see what this consolidation is going to do for next week. Tomorrow at 5, actually. All right, so
based on that wave, sorry, Kev.
No, go ahead.
I was gonna say, based on that wave, I mean, the reversal should be looking to buy, correct?
The reversal is definitely looking to buy, and it matches up. Like if you do I don't know if y'all guys studied your charts yet, but USD CAD we all got, so we can just go over this a little bit. Go to the daily. All right, key factor and write this down. What happens on the left, 9 times out of 10 happens on your right. Maybe not perfectly, but it definitely does happen on the right. So like see this here? Push up, push down. You see this area? Alright, right now I can tell you exactly where we're at. We're at this area. So we're looking. Oh no, I take that back. We're not at this area. We passed this area. We're on this area. This area right here. That's where we're at. Because it did its push up and push down already. That's when it pushed down to here. And if you don't believe me, let me do this. That's the bottom of that, right? Let me look to my left. What's the bottom at? Bottom's right there.
So we're on the second Elliott wave on that one, you'd say then?
No. If we're doing Elliott wave on a daily, you look at it like this. That's one push down. It's a push up, sorta push up right there. And see, this is where it gets tricky. That's why when you're doing stuff like this, I'd rather you do it on a 4-hour to the hour because it's harder to read on daily because the movements on a daily doesn't look as volatile on the 4-hour and the hourly. But anyway, you can do it one of many ways. You can count it 1, 2, 3, 3, and this will be 4, this will be 5, this will be 6, this will be 7 down here, 8, now it'll be 9. Now, if you want to count 10, 11, I don't think that's 10, 11. That's why I didn't count 2 of these waves. I did from up here, 1, 2, 3, 4, 5, 6, and that'll be 7. That'll be 7, and then this will be the 8th wave, and I think it's done. The reason why I believe it's done is because it barely made a lower low. We'll see if it makes a higher high. If it makes a higher high, then that wave is done. And because I'm looking at my left. And that was over. At this area, it was done. Like, this area is actually starting its trend. So on your right, it will be at the end of its trend. And it made a push down and made a bigger push up. Like it pushed up. So this is what I'm seeing that it's going to do over on our right, guys. This is why you look at your higher time frames. It's going to make a little push up, a couple pips up for like a day or two. It's going to retrace on like the 3rd day. It's going to get down to this 129-ish area, maybe a little lower. And it's going to boom up. Because you see what I'm seeing over here? If you do this in reverse, like you flip this one to like, oh crap. If you flip this to your right, on that right side, will, instead of it being down here, it will be to your left, and it will be pushed down here and then move up there. So I'm thinking on our right that it's already been down here. It moved up right here, consolidated right here. That's what the doji's for. Dropped down the day after for 2 days, actually 2 to 3 days. Then it moved up after the third day. So like the middle of next week, which it will actually be the midweek reversal. Usually midweek reversal happens Tuesdays through Thursdays. Lately, the past 2 weeks has been on Sunday and Monday. So I'm going to be keeping my eye on it. But this week it should definitely happen from Tuesday through Thursday, one of those 3 days. But you see how much it pushed up. Let's say if we get in on a buy where we should get in on, it's just going to form a double top or double bottom. That's 1 day, 2, 3, 4. We're gonna ride it to next week. 5, 6, so about 6, 7 days. So yeah, I see it moving up about 4,142 micro pips. We get on it next week and we ride it to the week after. Ride it for about 4,000 pips. Take profit. And while we're doing that, we're gonna get in on more buys from the Fibonacci retracement. So you see why I showed y'all the Fibonacci. Alright, so that's USD CAD and what I thought on that. Do y'all guys want to see some other indicators? What kind of indicators y'all guys use or are going to be using?
I have the RSI on mine. I don't know if that's a good one to use or not, but I've been using the Stochaic.
Okay, let me show you the RSI and how to use it. Relatively strength index. What you got your settings at? Default?
Oh yeah, hang on one second. Let me see. Let me make sure.
What about you, Craig, Trey? Y'all got any indicators y'all want to look at?
Hold on one sec.
Period 14. 0 to 100.
Okay, so it's set regular.
Yeah.
Okay, sorry about that, guys. Alright, so this is the RSI. A little bit different from the stochastic here, if I'm not mistaken. What you would do with the RSI is what I like to do with it is have one set at the 30, one set at the 50, and one set at the 70. So you can actually do that from, I just manually do my 50. Anything above the 50 is a buyer's market. Anything below it is a seller's market, as you see right here. It's basically showing you like the trend. It more so shows you the trend instead of what's the market mostly doing. Even though it is showing you right here, there's consolidation, 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 a little bit of a buyer's market, a little bit of a seller's market. It's just not, for me, it's not the same as the stochastic. Stochastic, you can see it a lot better. You see what I'm saying? Like, it's smaller right here. So it does have divergence in the RSI. I can show you one. Divergence right here. This one. Like, you have a higher push and then a lower push right here. But it's not as openly seen as the stochastic. You see what I'm saying? Like, you can definitely tell that it's a divergence right here instead of kind of squinting to look at this right here.
Yeah, I was thinking about getting rid of it because all I've been using is that Stochaic. And then what's that one, that indicator then that does that that shows the divergence? Hang on. See if I find the name of it.
It's called the stochastic oscillator.
No, not that one. The MACD.
Oh, MACD. Okay,
Yeah.
hold on. Ooh, man, I'm getting tired. I don't know why. Let me delete this indicator window. MACD. Man, I don't think I used that in like forever. think it's custom, right? Yeah. All right.
Just it
So
shows the divergence and convergence, but I don't know how to read it.
basically, oh man, I'll show you right now. See right here, where it's saying on your MACD that it's being sold.
Yeah.
It's a seller's market, but right here is a buyer's market because it's high. It's the highest it's been, but right here it's showing that it's not. You know what I'm saying?
Yeah.
So it's basically saying that the bulls didn't have any strength. It's going to be a sell. But like I said, if you use this and this together, then it will be a lot stronger because you can tell with the two. You'd be like, okay, seller's market, seller market, seller market. Down here, sellers have the strength, seller has the strength. But you'd be like, wait, how do they have the strength if it's a high market right now? Then you'd be like, okay,
So you're saying
boom.
the best things to use would be obviously the candlesticks, the stochastic, the Fibonacci, and the Elliott waves for now. Those are probably the strongest ones you're saying, right?
As far as divergence goes, yeah, for me, yes.
Okay.
Like you'll use the stochastic to find out the strength of the of the market, who has the strength. You'll go to if you want to find out the trend, where the trend's headed. This is another indicator, guys. Y'all guys are going to need this, so just watch what I'm doing right now. Go to trend, moving average.
Hey, Jason, can you mute real quick? 'Cause it keeps popping back to you.
Sorry.
That's all right.
So you hear what I said? Trend, moving average, and you see I have one at the 50. But we're going to change that. We're going to change one to the 8. That's simple. Notice exponential actually. We're gonna have one exponential at the 8. Alright. Y'all see that? Apply to close. We're gonna have that green. Close that. That's that line right there. If you don't see it quite good, I can make it bigger. Just a little bit bigger. Oh, this Alright, okay. There you go right there. And then you're gonna do another one. But you're gonna change the settings of it. Moving average again. This is gonna be simple. It's not going to be exponential, guys. Simple moving average. You're going to have this at 21. And this is another confirmation on your trade, and I'll show you why. This is going to be red.
And would you say they have the exponential one at?
Sit. Oh, it's exponential was at 8. See, it's moving average, exponential moving average, 8 in the parentheses right there. That's what it's set to.
Got it.
Alright, now this is how you trade with a moving average. You're not going to trade just strictly based off the moving average, but you're basically going to know what kind of market you're in. You see these crossing right here? See them crossing? When the green is crossed over the red, it's a buyer's market. See this right here? Uptrend, uptrend, uptrend. When the red is above the green, it's a seller's market. So that's basically going to tell you what type of market you're in at the time. If you want to see the overall trend, you'll set the moving averages at a higher time frame. But I'm telling you how to do it at a lower time frame because you're going to know exactly where the market's heading at that point in time. Higher the moving average, the higher you set the moving averages, because there's people that set the moving averages to 200 and 400. There's people that set the moving averages to 100 and 200. There's people that set the moving averages to 50 and I think to 200 to find out the overall trend. But you're finding out the trend of right now. You're going to be finding out the trend of right now and when it happens almost to the exact moment it happens. So that's why I told y'all guys to do it like that. So you see, right when it started becoming buyer's market, boom, it crossed right here. Crossed right here, and if you would have got your you've been looking for a sell, you'd be like, alright, where's some divergence? bam, right here, divergence right here, and it crossed, that's confirmation. Every day, all day. So that we call all those pips. It's 5,000 pips in like 3 days. So indicators to have, guys, the way I'm teaching you, you can dibble and dabble in some other indicators if you want to. I won't be butthurt, don't worry. Um, the indicators you're gonna be using are stochastic oscillator, default settings, and then exponential moving average and a simple moving average. You just basically get them from the same area though. You get them from trend, moving average, and you'll just change the setting to exponential from right here. And main method, simple, and then the other one's exponential. Simple as that, guys. So we went over fibs, we went over indicators, we went over divergence, we went over a lot of stuff. We really did.
Yeah, my head is pounding.
I think he's recorded this, right? Hopefully he did.
Think so, yeah.
All right. So I'll, that's gonna be it for right now, guys. Is there any pairs that y'all want to go over real quick so we can just like all get an understanding on it? Because
I'm
I'm
sorry.
about to eat. I'm starving.
Yeah, I haven't
Yeah,
eaten
hey,
yet.
yeah, I'm hungry too, man. Kevin, for the gold pair that we're going to be studying,
Oh yeah, I was trying to get it. That's why I was trying to look for it. I couldn't get it on the thing. So we're gonna have to tomorrow. We're gonna have to like get on the chat together, and then
right?
but it's gonna have to be from my phone though. So it's gonna suck
Yeah.
because it's gonna be from my phone because I can't find a chart on here.
No, that's fine. I was just gonna ask for the sake of, I guess, where I'm at right now, because the technical analysis of what we're doing right now, I mean, I'm still developing my own ability to read and find some of these indicators.
Right.
And on top of that, I still need to get a laptop. I got my Toshiba, but I got to get that thing fixed up because it's slow and it's got a lot of viruses that I need to get fixed up. But I was gonna do that, so I was gonna ask, should I just focus on the fundamental analysis for the gold pair, um,
Find
or
out
just do
which
my?
way, which area is moving in. Uh, Holy moly! What is that in the background?
It's not me. I'm not sure.
Could somebody mute their mic real quick? Cause all right. So yeah, what we're gonna do is we're gonna find out where the trend is, if it's an uptrend, downtrend. We're gonna find that out first. We're gonna find out the areas of support and resistance. That's what you can find out. Find out the areas
Yeah.
of support and resistance. Find out what type of market it's in, and then all of like the technical stuff, like where's the supply zones, demand zones. I'll find that out, and then I'll find out like if it's any fibs towards it, and if it's a buy or sell. I'll find out all the other technical stuff towards it.
So for now, just focus on finding the areas of support and resistance, and
Yeah, just the
then
basic stuff, and then you can just tell me,
um,
and I'll go over that with you. Like,
okay, and
really,
then
you just want everybody to have a pair, so they can stick to those pairs. Like, this is the thing: professional traders, they master one pair at a time. They master one pair at a time, one or two pairs at a time, actually, one or two pairs at a time, and they dabble in other pairs. They don't straight a focus to other pairs. They dabble in those pairs one at a, like here and there. If it's a good setup for that pair, oh, they're gonna dabble into it. They're gonna take a buy or sell. They're not going to have all their focus on every single pair. You do that, guys, you're not going to be a good trader because you're gonna be having your head like you're gonna be running around with your head cut off because you're gonna be looking at every single pair trying to get in on a buy or sell, and you're not going to be technical with it. If you're sticking to a couple pairs, you will have that in your head. You will know how it moves. You will know what it does when it reverses. Like just how I know with USD CAD. USD CAD always does double top, double bottoms before the midweek reversal. This is USD CAD right here. This was beginning for the midweek reversal. What happened? Double top. Bam. Reversal again. What happened? Double bottom. Damn. Reversal again. What happened? Double top. Damn. Like it does it all the time. It does it all the time. Like you need to find out. You need to find out that with your pairs. Once you find that out with your pairs, once you find that out with your pairs, guys, you're gonna have the market done for. It's gonna be game over. The market is gonna be asking for forgiveness. They're gonna be like trying to get you out of there. So that's what it's basically all about, man. It's basically about mastering a pair or two, trading on those pairs or two, and being in profit. Cashing pips, not zips, guys. You want to catch pips, not zips. It's the main focus. But yeah. Craig or Tim or Jason, you got anything to say?
Yeah, I sent you a Facebook message just about my two pairs about level counting, so you and I can just talk another time and set something up.
Okay, yeah, we'll talk about that. I was supposed to go over level counting with you guys. That's definitely something. That's definitely something I want you. I want every single one of us because I'm gonna be honest. I didn't perfect level counting yet. I know how to do it. I'm just I'm not fully 100% confident on trading strictly off of level counting. Because if you're really good with your USD as far as levels, you'll be able to take trades on that almost all the time, regardless of what type of market you're in. So all right, let's do this real quick, just real quick with you, Craig, so you'll know what to look up on like Google or YouTube or whatever. Um, this market moves in levels. Market moves in levels of 3 to 4. It's 3 to 4 pushes to the low, which is like kind of like the Elliott wave too, but it's not the Elliott wave. It's on a different level. It's 3 to 4 pushes to the low, consolidation, then a push up. The consolidation is basically resetting itself, and then it makes this move. So you have, all right, let's look at this. That's one push to the low, consolidate a little bit. Second push to the low, consolidate a little bit. That's
Yo,
it.
yo,
Third
yo.
push. Yeah.
Hey, there's like 10 minutes left on the recording, just so you know, because I set it for 2.5 hours, or you have until 9:30, I think, just so you know.
All right. I'm gonna be real quick. I'm almost done.
All right.
So yeah, guys, this is one push to the low, consolidation, second push to the low. Now, when I'm talking about pushes to the low, you're always looking for a lower push if it's a sell, like if you're doing sales. If it's the opposite, you're looking for higher pushes, like higher candlesticks, like this one right here. Oh crap! All right, I said this is one push to the low because it's a candlestick that's the lowest candlestick at that time. You see what I'm saying? So that's one level. That's one push to the low, then it consolidated a little bit right here. Then you have your second push to the low, which is right here, consolidated. Then you have your third push to the low, consolidated. I think you have one more push to the low, which is right here, consolidation, consolidation. And if it keeps going, if the lows keep going, then you're not going to look for a buy or sell on this market because it's too strong of a trend, which this is. So this was actually a bad example. But if you do it like this, you can also do it like this, and this way it can confuse them, and it confuses me at times too. Uh, say this is consolidation or whatever. This will be one push to the low, two push to the low, three push to the low, consolidation, bam up, and it resets itself. Then you do it over. One push to the low, moves up. Two push to the low. Three push to the low. Consolidation moves up. Like that's that's where it gets tricky. So I'm still, to be honest with you, trying to perfect it myself. A person that's really good at it. His name is called Ryan Lloyd Gilpin. Um, he's really good at that. I'm actually in works of looking at some of his level counting videos. I think he has like one or two. I'm in works of looking at that so I can perfect it myself because I'm always learning new things. I always try to learn new things because I'm not going to sit here and say it's nothing that I can learn in this market. There's always something that you can learn in this market. Um, and one thing I did learn, my last thing to be quick with you guys is just basically break off your markets, like different time frames and different sessions. Break off your sessions in the market. It's quick, simple as doing shapes, and I'll tell you the exact times. 0 GMT to 7 GMT. That's Asian session. So you'll make your square in that session. You do it like that. Let's make sure I'm right quick. And the reason why you do this is because you'll know when to trade and when not to trade. Like this pair, Euro USD. You're not going to trade it in the Asian session. Why? It doesn't move. You can look at it every single day. This is different days. This is 1 day. This is 2 day. This is 3 day. This is 4 day. All around that same time. It doesn't move. So why would you trade Asian session, which for you guys will be 4 p.m. to about 11 p.m., 11, 12 p.m.? You're not going to trade around that time. It's no movement in Euro USD. At least for Euro USD. It mostly moves London. This is London. From 8 GMT to, well, no, it's not, London's not 8 GMT. London is about 11 GMT, 10 to 11 GMT. 8 GMT is actually Sydney, I believe. So 8 GMT is Sydney. It moves a little bit during Sydney because it has to reverse before it makes its movement at London. London reverses around for pairs. London reverses pairs around 10 GMT to 12 GMT every day. And we can.
What time is that for us then? Like, what is that Eastern time? Central.
It's around 2 a.m. your time, 1 or 2 a.m. your time. Usually makes a reversal every day or shows you a reversal every day around that time.
And that's from that session. London's from 2 a.m. to 1.
Well, it's like 1 a.m. to about 3 a.m. your time, not my time.
I'll try to post it. I have a chart that shows what it is. It's in Eastern Standard Time, but it shows what time all sessions open and what time they are for us.
Yeah, that'd be great. Thank you.
So yeah, this is more advanced on as far as what studying wise goes. We're gonna get into this, but it's gonna be a little later. We're gonna get into session trading and what session is the best to trade. But I can just quickly go over it. As you can see right here where my crosshair is, it made a push up and it retraced, became a sell, consolidated. It always consolidates before Asian session. Always consolidates before Asian session because it has to reset itself for this next movement. Made a movement, boom, made a reversal pattern, short buy. Oh, write these 2 times down. 10 GMT to 12 GMT, and then you'll slash that and put and 15 GMT to 17 GMT. Those are 2 reversal times, guys. 2 times the market reverses. It reverses at 10 to 12 GMT and then 15 to 17 GMT every day, especially on Euro USD, as you see. This is what 10 GMT right here. Reverse to be a sell. 15 GMT, reverse to be a buy. Consolidation for Asian. Buys during 10 GMT, sell during 15 GMT. Oh, and also put it may happen an hour later, hour earlier of those times. Rarely happens, but sometimes it does. All right. If everybody got all that stuff down, I'm done for the night. I'm hungry, and I still got some more studying to do. So.
Yes, sir. Same here.
So it's been real. Hopefully, you guys got some nuggets. And we'll drop some more. Drop some more later next time. All right.
Sounds
Sounds
good.
good. Thanks,
Sounds
man.
good.
Appreciate your time.
No problem. No problem.
Thanks, Kevin.
No problem, guys. Make sure you study those pairs.
Yep. All right, fellas. See you later.
All right.
All right, guys. Take it easy.